When I tell people that I bought $1 million business, the first question that I always get asked is, how the hell did you afford that? Which is fair enough, I get it. But here's the truth. I did not use a penny of my own money. I raised just over $1 million using other people's money, also known as OPM. In this video, I'm going to break down for you exactly step by step how I structured this $1 million business purchase. No fluff, no bullshit, just the exact funding vehicles that I used to make this epic purchase happen. And look, I am nothing special. It wasn't that long ago that I was working 9 to 5. It was around 6 years ago before I became an entrepreneur, and I've tried many different things in the past, but nothing has given me the life that I currently have now, like business acquisitions has. Like, I've recently flown first class to and from Thailand with my wife. We've got another trip planned very soon. I pretty much wake up, go to the gym, create content, look for more businesses to buy, and try and do deals. And I also teach normal people just like you how to do what I do. So I actually have a mentorship club called AAA Club that, if you wanted to, in the future, you could be a part of. But like I said, I am nothing special. I did not, and I still don't have £1 million in the bank, and I didn't have like a golden handshake, a really rich relative that gave me money, or some massive private equity fund that I could just take money out of. What I have is the right strategy and the right structure. I now buy multi-million-pound businesses, and the most recent acquisition cash flows £300,000 profit per year, and I've inherited that from day one. And all the purchases are done with none of my own money. And the best part, these businesses are not tech startups, and they're not distressed companies. They're boring, they're very well established, they're recession proof, they're niche, and they're needed. Yet they still print cash. This is not guru talk, and I'm going to show you exactly how I funded the $1 million purchase. So by the end of this video, you'll know exactly how I did it, so you can do it too. So stay tuned until the end. I actually used 6 funding vehicles to make this deal happen. Let's kick it off with number 1, private investor finance. The first part of the funds came from private investor finance. Now, I'm not talking about a big VC firm or a billionaire angel investor. I'm talking about someone or an individual that had money sat in the bank getting fuck all interest from that bank. In fact, the person that had the money sat in the bank is actually losing money. Why? Because the money sat in the bank is devaluing because of inflation. So they wanted to take that money, give it to me, because I gave them a better ROI, return on interest. I showed them the business that I wanted to buy, all the accounts, everything. Transparency is key here. I showed them how I can secure them against the deal, so if anything went wrong, they could get their money back. And I gave them 10% interest on the money that they gave to me for 5 years, and then they get a guaranteed payback off the initial funds that they invested on year 5. This means that instead of earning a small amount of interest sat in their bank account, they earn 10% interest giving it to me. I offered them security, so they were very happy, thus meaning that their money was now working for them, simply by giving them a better return than what the bank can give them. They led me $200,000 secured against the business. Now, the business cash flow pays the investor back their money, not me personally. So, private investor, no money down, $200,000. And by the way, can I just say in this video, this was all done in the British pound. So I can't be bothered to go online and look at the exact currency exchange. So I do know it roughly, but I'm saying $200,000 for this. However, it was actually a different number in British pounds. But for this video, I'm doing it in dollars. I'm not really sure why I'm doing it in dollars, to be honest. I think it's just more universal and sounds better. So there you go. Funding vehicle number 2. Asset-based lending. This is where it gets fun. Asset-based lending lets you leverage the company's machinery or stock or receivables so that a lender will give you money. The company that we bought had solid assets in the form of machinery because it's a manufacturing company, and we leveraged 4 of the bigger machines inside the building, so the lender would give us money against the perceived value of these machines. Exactly like car finance. If you've ever got car finance before, this lender will lend you the money against the value of this car, right? So if you fuck up on these payments, they can take the car and sell it. Exactly the same thing. We leverage money against 4 machines. If we default on the monthly payments back to the lender, they can then effectively sell the machines. We secured £350,000 against these 4 massive machines. This was over a 5-year term. So after 5 years, the loan is paid off, and then we get the machines back in our company name. And the business pays the monthly bill to the lender. Again, no money there. Didn't use any of my own money. We leveraged the value of the machines in the business. And I still get to keep the rest of the profit month by month that the business makes. Funding vehicle number 3, unsecured loan. And what is the difference between an unsecured loan and a secured loan? So if you think about it, funding vehicle number 2 was asset-based lending. So the lender is lending against the value of 4 machines, right? So they would consider that secure because if you fuck up, they sell these machines, they get their money back. But an unsecured loan is when a lender will lend you money against the previous history of accounts, so the previous profitability of that business and a 12-month forecast that you generate. But it's unsecure because they're banking on the company doing either better or at least staying the same. But they don't have any assets to lend against it. So usually this will be a higher interest rate than the secured lending. And this does surprise people really, but if you think about it, if a business has been there for 36 years, it's shown really good accounts for 90% of those years, it's a pretty safe bet for that lender. So you can do it. And we actually used a company called Close Brothers in the UK for the asset-based lending. And then they actually offered me, without me asking, the unsecured loan. So we got the unsecured loan from them too. And they gave us $100,000 of the unsecured loan. And again, the business pays that bill every month, not me. So this is why we buy boring, recession-proof, well-established, niche and needed businesses, because it opens the door to much more lending. So far, we've had private investor finance for $200,000. We've had $300,000 against the machinery, and we've had $100,000 as an unsecured loan from the same company here, totaling $600,000. Funding vehicle number 4, property equity release. Here's what a lot of people miss. When I say property equity release, I do not mean the equity from my own property, the one that I'm currently sat in right now. The seller released the equity from the property that the business operates from. Why and how could he do that? Because the business also owned the commercial building itself, and we bought both, which I love, because this is property investing on fucking steroids. If you look at the residential property industry, there's no tenant in the world that will pay you £300,000 profit for the year. This is what the business does. The business is effectively the tenant of that property, and we bought both. We're in control of the tenant. It's amazing. If you're gonna invest in property, do it like this. Commercial property is way better than residential. Anyway, bit of a tangent there. We used the property that the business owned, the one that I was actually buying. We released the equity, and we used that equity, which is tax-free by the way, because it's effectively a loan. That money went straight into the solicitor's client account, ready to be used as part of the acquisition to pay the seller out. So the seller had effectively been paying that mortgage for decades, and now he was using it as a vehicle to give him his payday. Win-win, people. He released $150,000 and we still had 40% equity of the total value even after that release. So we can actually release more if we want to, but we don't. But if you think about that for a second, it's mental. The business paid for its own acquisition whilst I was still buying it, or my limited company was buying it. I didn't need to touch any of my own money. The seller arranged it all and I just took the keys. Fucking win-win. Funding vehicle number 5, Invoice financing. Most people don't even think about this one, and I'm going to try and explain it the best way I can, because if you're brand new to business acquisitions, it's probably going to be hard for you to understand. So when a business does work for a customer, when the work is done, it's delivered, they will then send that customer an invoice for the work. Let's say it's for £10,000, for example. That customer then usually gets between 30 and max 90 days to pay that invoice. But because that money is owed from the customer to you, there's invoice finance companies out there that will see that invoice as an asset. And even on your end of year company accounts, if you look at the accounts and you know how to read them, under assets of the business, you'll see the word debtors. Debtors means the value that is owed to you in invoices from customers that you've done the work for. So you've sent that out, it's 10 grand invoice. Invoice financing companies will say, okay, we will take that 10 grand invoice. Instead of you having to wait 30, 60, 90 days to get that invoice, we will give you 8 grand of that invoice, so 80% right now. And then when that customer pays the invoice, the 10 grand goes to the invoice financing company and they'll take a percent on top. That's how they make their money. So let's say if you've got a debtor book, which is the entire book of companies that owe you money of 100K, you can usually get around 80K straight away from the invoice financing company. And you can use that as a sum to give to the seller as payday. And then when the customers pay, it goes to the invoice financing company and they take their percent on top. That's it. Very simple. However, the more money you draw down from the invoices owed, the more money the invoice financing company will charge you. So we thought it was best to keep it as low as possible, and we only took $50,000 via invoice financing. This can also be called invoice factoring. It's just a cool way to get money owed to you fast, rather than having to wait 30, 60, 90 days. Thus meaning we win, the seller wins, and the invoice financing company wins. Funding vehicle number 6. And this one is a fucking weapon. And it is used in almost every single business acquisition done in the entire world. So do not be scared to ask for it. Deferred consideration is exactly what it sounds like. And it is the final piece of this puzzle. I basically promised to pay the seller over a period of time. In this case, it was 3 years. So with the 5 funding vehicles that we've already spoken about, the private investor, we raised $200,000. The asset-based lending, we raised 300, giving us 5. The unsecured gave us another 100, which gave us 6. The property equity release gave us $150,000, which gave us 7.5K. And then the invoice financing company gave us 50K. That's given us a total of $800,000, which means we were shy $287,000, which we said to the seller, look, we can give you this 800 now, and then we will pay you the remainder over a 3-year period. It's as simple as that. And you did hear it right. The business itself is paying off the rest of the purchase price. I then get the keys, I get the cash flow, I get the staff, the management team, the customers, the clients, the 36 years worth of branding, and I get full control. The business is mine, I got the property, so I'm investing in property too, and I did not use a penny of my own money to buy it. Total money raised was $1,087,000. 6 funding vehicles, none of my own money. Now I own a very nice business that pays £300,000 profit per year. And in 5 years' time, these 6 funding vehicles will all be gone, and I will own everything outright. And I can either choose to keep it for the cash flow, or I can then sell it for probably around $2 million when the time comes, if I want to. But I don't want to. I want to keep adding to my group, make this group valuable, and I want to sell this group for anywhere between $30 and $50 million in 5 to 8 years' time, if I want to. Or I just keep the cash flow. Because when I buy these businesses, they are already very well run. The staff are in place. They have a management team. So I don't actually do anything. It's passive income. The last thing I want to do is buy myself a job here. So when you buy right, you change your life. Just like I have done, and just like a lot of my students have done inside 888 Club. We all work together as a wonderful network of people that are striving to buy 7 six-figure profitable businesses. It's the best way by far to build generational wealth, and there's nothing on this earth that can compete with it. Not only are you buying cash flow, you're buying assets. Assets that pay you every single month. It's fucking mental. Forget residential property. It's a mux game, it's a slow game. Commercial property is where it's at. So, the next time that someone says to you that you need to save for 10 to 20 years to be able to buy $1 million business, just fucking laugh at them, because it's crap. I raised just over $1 million using none of my own money. And if you want to deep dive even more into how I structured this, I put together a free training video just for you. This is where I will actually walk you through the whole thing, and it's totally free. The link is literally in the description now, so go and click it. No pitch, just a playbook, so that you can win too. And please don't forget to hit the subscribe button, and I will be producing videos just like this every single week. So it's nice to know that some people actually like me. Here is the playing the game differently. See you next week. Peace.